All right, so we literally have 219 potential trades that we can take this week for the earnings strategy. And I would be surprised if we place any less than like 20 or 25 trades. Last week was pretty good for earnings. If we take a look here at the sheet, we can see that we placed about 15 trades. We won 9 of them. And realistically for the losers, like a few of them were basically a scratch. I made a couple mistakes last week that I think we talked about in the last video, but we'll talk about it again today. Just around trading monthly options that are pretty far out with pretty low premiums and a wide spread, and it's just being like you're just giving money to the market maker. It just doesn't work. So we'll talk about that. It's one of the adjustments we'll make for this week that will impact the volume of trades we take. Besides that, just a quick note about the ETF premium strategy. Things opened up this morning looking pretty good. Once again, we are in 4 trades there. We're in EWZ, XLP, XLV, and XLF. We're trading, a 40K account together here. Realistically, if it was a little bit bigger, I would be adding in DIA right now. But with that being, roughly a $400 underlying, I think, it's just a little bit too big for us to add to the account, given the margin requirements. I'd rather have a few more trades on than just slap on that one big trade, even though it looks really, really good. Right? If we come over here, let's take a quick look at it. If we pull up DIA, and we take a look at this back test here, like, honestly, if my portfolio looked like this, I would not complain, right? So that's kind of my benchmark for if I add it for the ETF strategy, right? We want to see positive variance risk premium, positive straddle P&L, right? An average return on short straddle of 8.53%. That's pretty sick. I wouldn't mind having this in my portfolio. But with it being $420, doesn't quite fit the profile for the account that we are trading together. So yeah, that's pretty much it for the ETF one. Always remember, I don't spend that much time talking about this stuff because we're not supposed to be like over analyzing everything. It's the whole premise of what we're doing together here at Predicting Alpha is just boring strategies that actually make money. They're meant to be boring. We're not meant to feel like we have some like all-seeing eye of the market that can, predict what happens in the next 10 minutes or something like that. We just do what works because there's a mountain of evidence behind it. And I think I will remind you of that in every single video because sometimes it's easy to get ahead of ourselves and start overanalyzing. And that can actually be detrimental, right? So let's just stick to the game plan and roll from there. All right, so getting back to talking about earnings, since that's really what's hot right now. We got a lot of stuff this week, but let's zoom in on today. If we come here to earnings premium strategy, looks pretty good. Also, if I just I'll show you guys here. We're yapping about it in the server right now. This is the list of trades that I'm looking at. Pfizer, definitely going to be taking that. McDonald's, even with all the drama recently, I still think it's a good trade. We'll get into why. And then there's a few others that are maybes just based on liquidity. And then actually something kind of interesting recently, which is I've been thinking that I might mess around with some like recency bias type of stuff where, if I pull up, for example, which one was it? ICNY. It's on this list somewhere. If we just, let's look it up. ICNY. What? Is that not what it is? Okay, 1 second here. Where is it on this list? It is, INCY. Okay, yeah, that's my inability to read really showing itself. Okay, so for this ticker, what we're looking at here is the back test, right? So overall, the main stats look good, right? It's like 4.79% implied, 3.82 average move. Cool. This is doesn't really stand out, but it looks okay. The thing that stands out to me is ever since the middle of 2023, so about 6 events, this has been a banger. This has been a really good trade, right? We see that recently, looks like the market has been pricing in a pretty substantial risk premium. We've been getting paid pretty well. And why wouldn't we keep that going, right? So even though, historically we've seen a couple jumps that make it less attractive to us, something that I'm playing around with here is maybe, hey, if the last 6 events or so have been pretty consistent, pretty stable, maybe we just slap on this trade as well and hopefully it works out. Obviously, with this trade in particular, we still need to do some, research on the option chain itself, see if we can actually get a fill. 600 option volume is really not that much. But I show you this primarily just for the analysis on the back test, right? This is something that I'm thinking about. I'm curious what y'all think about this. If you have any insight on it or opinion, feel free to drop it in the comments. We can chat about it. But yeah, that's looking pretty good. And then the other ones that are like definitely being taken, if we look, for example, at Pfizer, check this out. This is like, what do you want me to say? This is just exactly what we look for. What we'll do now is I'll just walk you through the analysis of Pfizer so that you can understand how I look at this picture that we have in front of us, right? The way I think about this is a snapshot, a little story of the earnings event for Pfizer. And when I do that, it's kind of like I have a checklist of stuff in my mind that I look through, and it paints the full picture for me, and then it makes it really easy for me to basically say yes or no to including it. So I'll walk you through that right now. So starting just on the key metrics up here, right? Pfizer has its earnings event tomorrow before market open, and that means that we would place the trade today if we are going to take it. So it is something I should look at now. On average, for this earnings event that's coming up, market is saying there's a 3.26% move up or down that's expected. And that's what's baked into the option price. The option market is saying this thing's going to be up or down 3.26% tomorrow. That's what the option prices say. But if we look historically over the last 4 years or 16 earnings events, it only moves 2.16%. Implies a range like this, moves within a range like this. That's pretty much what we're saying here. And obviously it doesn't always move the average. So the biggest move we've seen has been 6%. And I can use that to sort of start benchmarking what a losing scenario looks like, right? If it were to blow out, maybe we have like a 100% of premium risk, or we can double it, 200% of premium risk. And that can help me size this trade. And then on average, if we were to be selling some straddles here, we can make almost 30% a straddle on average, which is nuts. It's a huge, huge return. So that makes me super happy. I look down at the hedge straddle backtest and I don't know what else to say besides this looks good. This is exactly what we want it to look like. It almost always wins. Great. No major drawdowns. It's probably because, it's a pretty big company. It's pretty stable. That probably plays a role here. So no major concern for me. Looks great. And then the last thing would be, I just look at the jump. So I want to say what happens like right in the morning versus what was implied. And if we look at this here, every single jump has been smaller than the implied move, which means that like in the last 4 years, there's never been a jump bigger than 3.26% on average. And that's perfect, right? I guess this one here, there was a 4.83% jump back in 2022, but the implied move at that time was almost 7%. And one thing I'll keep in mind is that the 3.26% implied earnings move is on the lower side of things. I tend to think of it as the market is feeling very confident in how it's pricing it. So I don't really stress that too much, but we do want to keep in mind, there's a little bit less juice than usual here. Even compared to the last few earnings events, this is the lowest. The last time it was down at this was basically a year ago. So something to keep in mind as we place this trade. So that's pretty much what's up with Pfizer. You see similar stuff across the board. Like if we look at like McDonald's here, we take a look, looks pretty similar, a little bit choppier, a little bit more jumps in recent times. So I'd probably, keep that in mind. It's also a $300 stock. So always keep in mind the size of the underlying when you're trading earnings. I've seen it so many times where people will be doing great all season. They're trading, smaller capital size on this, maybe let's say even 20 grand. And then they go and they size up on just a ticker with like a $500 underlying. They trade one lot. It's not a big deal, but it has a blowout move. And because the underlying was so big, they're taking, a 10, 20% drawdown on their portfolio all of a sudden. And it's like all the work they put in just got erased, when really they sit there and say, oh, but I traded a one lot, but it's by nature of the ticker so much bigger than the other ones. We want to really make sure that doesn't happen to us. So yeah, that's pretty much it for today, guys. We're just in the middle of earnings season. We're going to be yapping about it in the group. So if you're a PA member, I'll catch you in there. If you're not, I'm hoping these videos are giving you some idea of how we think about earnings. We try to keep it pretty simple here and just do stuff that actually makes money. I'll put a link for a free trial in description, a bunch of random education and stuff. So feel free to check that out. And I'll make a video probably on Wednesday, giving an update on the portfolio and chatting about what other trades we're looking at. In the meantime, everyone, happy trading. I'll catch you soon, all right? Take care.